The next topic, till now we have discussed about capital gains deferral, and this is something how we can amortize land. So if I say land, can it be depreciated? No, we cannot depreciate a land. But now I would say how we can depreciate a land. When I buy the land because it is fertile, and that fertility I expect it to be for a certain period of time. In this scenario, if I expect that my fertility for that crop production of that land is expected only for 10 years, I would allocate certain portion of the land for amortization. So if I buy a land for 200,000, I assume this land will be fertile only for the next 10 years. So I break down that land. Part of it is a fixed, like it's a land. I'm not going to depreciate or amortize it. But a part where the natural fertility, after 10 years, I have to spend an additional 50,000 or 70,000 to again make the land fertile. That 70,000, I can take it as that I'm going to amortize that portion of the land. So if I bought a land for 200,000 and I'm expecting it would be fertile for the next 10 years. After next 10 years, I have to invest another 50,000 to make that land fertile for my next crop. So when I purchase the land, I would divide this 150,000 is portion of the land, 50,000 is for the fertility of the land. And that 50,000 I can amortize over the period of 10 years. And at the same time, after 10 years, when you do additional expenses, that can be depreciated or amortized or expensed basing on the nature of the
based on the nature of the expense. The idea is if you relate this thing with cost segregation study, you bought a property, you can choose to depreciate it over 39 years being a commercial property, or you can do the cost segregation study that not everything is going to last 39 years. There is furniture, fixture that has lesser life. Same concept here. You have a land and somebody told you you cannot, nothing can be done. Let's do a study over here. Let's see. There are companies specialized in cost segregation study or this type of assignment where they can tell you this land has this fertility or this value, this is the purpose of the land, and this is how we allocate the value. Based on that report, you can start claiming certain, especially if you are thinking about selling the property, selling the land in near future, in the n number of years. That's when you want to maximize the depreciation, maximize the tax benefit.
Is there a fund for this as well?
It's not a fund. You don't need a fund. You need enough money to buy the land, and then you. Right. So you can go through a fund or friend or family, but not necessarily. In this case, you don't have to. It's not a specialized skill. So this concept is very, very nifty concept. This historical building preservation, if you have not heard anything, just focus on this thing and you will have a chuckle out of it. You will have a laugh at it, how the concept works.
Preserving and rehabilitating historic buildings can provide significant tax incentives, and I would say federal is giving 20% credit on the repairs or the additional improvements that you be doing it on this property. You will get an immediate credit from federal, and also some states will allow credit. On top of it, if it's an historical property and it has some significant value, you will be paying property taxes less than regularly the ones who pay, and also like the value of that property is very high.
Can we rent this?
Yes, you can rent it. So the concept at a high level is preserving the historical buildings. So you go around, find a building that's, let's say, 100-year-old, 5-acre lot. You go to the township, hey, 5-acre lot, I can make 10 apartments here. It will cost me $5 million to make this 10 apartment. I can sell each apartment for $1 million. Potentially, if I execute this project, I can make $5 million. Township say, oh, we don't care. You want to do? Here's the approval. You have the approval now. You turn around, go to the state. Mr. State, it's a 100-year-old building. You should preserve it. It's a historical place. What if I donate you this place? Are you donating the building? No, I'm not donating the place. I'm not donating the building. I'm donating my right to construct. I will not be constructing this building. I'll maintain this building, outside wall, inside wall, the way it has been in a historical preservation way. So what am I donating here? Right to construct. You can still maintain it. You can still live in there. You can still have the rent coming. And how much is this value of your donation? $5 million. Because you can invest $5 million to get how much? $10 million in this example. So in theory, you just donated the state $5 million. It's a non-cash donation. You can put it on Schedule A. There are a lot of rules around. I'm overly simplifying the example. So you have an idea. There are people who are doing it. There are companies that will help you identify they approach a lot of people like you. Everybody invests $100,000 to $200,000 in this fund. They will go around, identify the property, get the necessary approval to construct, then donate that construction right to the state and give you on K1, you donated $1 million, you donated $500,000, you donated 200,000, you donated 7 million. Everybody claims on their tax return. That's the idea in a nutshell. The limitations. So the first restriction, IRS benefit is limited to 2.5 times of your cost basis. If you are investing $1 million, maximum donation is $2.5 million. And how did they come up with this 2.5? When the rule was made at that time, federal income tax rate used to be 39.6% few years ago, prior to 2017. So they said 2.5 times, so you can get 40% tax rate, will give you 2.5 times. So you are recouping your basis.
Is it top line deduction or is it a tax basis?
Top line deduction, your income goes down by the same amount. Limit is 50% of your AGI.
Okay.
It's a non-cash donation.
50% of each. Okay.
But you don't lose it. If you don't use it this year,
Next
you
year.
can use it.
Oh, okay.
The maximum donation, the receipt that we are giving you, is limited to 2.5 times
Of your
basis, cost basis, whatever money you invested in.
multiple years.
You can use it depending on how much income you have. And just remember, state of New Jersey does not give this benefit.